Hello all, I'm Fernando Trujillo, responsible for the Automotive Advisor Service at IHS Market in South America. I'll be talking about the Brazilian automotive industry, which could be an interesting market for your business. And in the end of the presentation, you will have my contact, so you can do a follow-up if you have any question. It will be a pleasure to be speaking with you. This is the agenda, and I will pass through the Brazilian macroeconomic outlook with the main indicators impacting the automotive market. Then I will speak a little bit about the light vehicle sales and production, and to finish, I will talk about the powertrain trends. So to start, I think that it's important to give you a quick overview of how the COVID-19 is evolving in Brazil. Today, we have over 5.5 million cases and 160,000 deaths. We are finally seeing some deceleration in the past 2 months, as you can see in the charts on your right. But as Brazil is a large country, we have regions that are still facing growth in the number of the cases, while other regions are decreasing. So we cannot say that we have already under control the COVID-19 situation. We are seeing a second wave starting in other countries in Europe, for example. And here we are still trying to control the first one, since it was never really under control. But let's see how this pandemic impacts our automotive market. The economy was hardly impacted, and the GDP that was expected to increase 1.7% now is forecast to drop 5.9%. We saw the unemployment growing to 12.2% with many industries firing employees. Industrial production is expected to decrease 6.1% over 2019, which was already down 1.1%. The government actions to keep inflation down, as lowest interest rates in Brazilian history, it's giving positive results so far, and inflation is expected to reach 2.7% by the end of the year. But on the other hand, our currency devaluation is pressuring the inflation, and already reached over 5.2 reais per dollar. The Brazilian economy in the short term is not bright, and we still have a lot of risks, mainly on the political side, but we are expecting to face a moderate growth in the upcoming years. Looking a little bit deeper on the interest rates and the financial conditions, as I mentioned, the government dropped to 2% a year. It's a record low in our market, and this stimulates business and investments. We can see in the gray line in the chart on the left that in 2016 the interest rates was at almost 15% a year, so the drop was really significantly. And this drop started to push down the interest rates for the automotive market, which is much higher, now set at a little bit below than 17%. But the spread is the highest in the past 10 years, because the banks are still not really comfortable to reduce even more the automotive interest rates. But as you can see in the chart on the right, the loans default rate is dropping, and the amount of loans reached almost 200 billion reais. So loans indicators are improving, and this is really important for the Brazilian automotive market. It's the main driver for the vehicle sales in our forecast models. Another very important indicator is the vehicle price. We saw the vehicle average price sold in Brazil increase over 20% since 2013. And we have the main factors listed here that caused this increase, as implementation of the safety legislation, low utilization rates, end of the IPI benefits, and consumer demands for infotainment growing considerably recently. But this year, with the pandemic, the vehicle price already increased 15%. And we all know the reasons, as currency devaluation, lack of raw material and components, very low utilization rates, and others. This is also pushing down the market, since it's very sensitive to price. And now we are seeing an average price of 95,000 reais. It's a very high price for our vehicles in Brazil. So we saw the main drivers that impact the automotive market, and now let's see the sales outlook. The Brazilian market was expected to reach 2.8 million units in 2020, and the COVID brought us down to 1.91 million. It's a drop of 28% over last year. Brazil was the third country most impacted by COVID-19. We expected that the market to recover 2019 volumes in 3 years, only in 3 years, by 2023. The market is already showing some strong recovery, and October was the first month to surpass 200,000 units in 2020. We can see that April and May was really weak month, and the market has been recovered since then, very well aligned with our forecast since March. I think it's very important to mention that COVID-19 accelerated some trends that were already occurring, as segment mix changes, and OES vying for quality and profitability instead high volumes. And with that, the competition is still increasing. The top four players back in 2015 was Fiat, Chevrolet, Volkswagen, and Ford. Now, Ford, that was the fourth best-selling brand, was surpassed by Hyundai, Renault, and Toyota. And Fiat, that was the best-selling brand, dropped to the third position in 2020. But if we consider the brand Jeep, which have been very successful in Brazil with its portfolio of SUVs, FCA comes back to the first position. Very interesting change in the market, and it shows which OEM was better prepared for the crisis and took the best actions. And we will see more movements in the market in the midterm, and the top four players will lose market share from 59 to 54%. This change just shows the OEMs that they need keep investing in their portfolio and technology to maintain their market share. And as I mentioned before, the COVID accelerated the segmentation mix change. SUVs were already gaining market share, and it's a globally trend, right? But this year, SUVs gained almost 5% of the market. And here we can highlight two reasons. First, the new launch, as Volkswagen T-Cross, that was launched back in 2019, but this year became a success, mainly after the launch of the direct sales version and the new Volkswagen Nivus. And the second reason is that during the crisis in Brazil, the entry vehicles are most impacted, mainly hatchbacks and sedans, giving more volumes to high-end segments as SUVs. So besides the SUVs, pickups are also performing well due to the agribusiness in Brazil, that reached record highs this year. And looking at the forecast, with all OEMs focusing their new investments in SUVs, we will see the segment reach over 40% of the market by 2027. The direct sales that was increasing at a fast pace already, reaching over 45% last year, decelerated this year due to rental car business impact, mainly by reduced utilization of ride-hailing method of transportation. But we don't expect in the midterm the direct sales to surpass 50% of the market as was increasing in the past few years. And the imports is still stable. We saw the decrease in the past few years due to localizations of new OEMs, mainly the premium ones, as Audi, Mercedes-Benz, and even Jeep. And for the future, we foresee a small increase due to OEMs' production strategies, with programs moving to Argentina and Mexico. Now let's see how this is reflected in our production output. As the industry is very dependent of internal market, we saw almost the same impact of the production volumes compared with sales. It was a little bit worse due to the volumes exported to Argentina. Before COVID-19, Brazil was expected to reach 2.9 million units produced for light vehicles in Brazil. And now we are forecasting 1.9 million units. It's almost 1 million drop. It's a very considerable drop. Compared with last year, 2020 production volumes will drop 30.4%. And as in the sales, the recovery will take at least 3 years to reach 2019 levels. Since mid-July, 100% of the factories are operating, most of them with temporary reduced shifts and lower number of employees. Still many uncertainties on pandemic evolution. As I mentioned before, we are still fighting the first wave, so most of the mid and long-term investments are on hold. But on the other hand, we are already seeing some production plans reflecting an increasing trend for the next few months. Nowadays, the inventories are lean, but with the market recovery, the inventories will also need to recover accordingly in the next years. The exports that was already being impacted by Argentina economic crisis since last year was even more impacted this year. Brazil should reach a little bit over 300,000 units exported. As Argentina is our main exported market and we don't foresee a fast recovery in their economy, the exports won't surpass 600,000 units in the mid-term, as already passed in the past. And looking at the production capacity and the utilization rate, we can see that some adjustments will be made on the industry. And the straight time capacity that was running above 65% dropped to 45% this year. It's a record low for our industry. With the adjustments and the market recovery, we expected that the utilization rate reached almost 70% in 2023, returning to a profitable margin. Now, let's talk about powertrain technologies and electrification. First, I think that's important to give you an overview of our current energy efficiency legislation, which is under the Rota 2030 program. It's a mandatory legislation, meaning that all brands selling vehicles in Brazil need to comply with the targets in 2022, 2027, and 2032. The government has defined only the first phase targets for 2022 so far. The targets are split in 3 vehicles clusters with different levels of improvements for each one, and they are able to the brands are able to get IPI credit up to 2% if their company average surpass the minimal legal target. But comparing the Brazilian legislation with other countries, we are still above the average curve, what means that our legislation is not restricted as the ones in Europe, China, and South Korea, for example. We expected that each new cycle of 5 years, the target will get more tight, and will bring the curve closer to a global curve by 2032. Besides the energy efficiency legislation, the government also is trying to incentive hybrid and electric vehicles with IPI reductions. The internal combustion engines has a taxation based on the engine size, and with this new decree in place since 2018, hybrid and EVs taxations are based on energy efficiency and curb weight, which is much more coherent for this type of vehicles. So for battery electric vehicles, the new IPI starts in 7% and goes up to 18%, while the hybrid vehicles starts in 7% and goes up to 20%. In the second case, if the hybrid vehicle has the technology of flex fuel technology, it has an additional discount of 2 percentage points. Here is just a table summarizing the IPI for hybrids and electric vehicles, but the message that I would like to pass here is that those incentives are not enough to boost this kind of technology in our market, because the tech is still all imported and very expensive. And looking engines technologies that the legislations are bringing to our industry, it's clear that the downside is the focus of the OEMs in the short term, which will be enough to comply with the targets at least in 2022, the only one that has been defined yet. We can note that Brazilian vehicles already has a high penetration of VVT and aluminum block, with over 6% of the market today, and will increase close to 90% in the future. But what I think it's important to highlight is the growing adoption of 3-cylinder engines, turbo compressors, direct injection, and stop-start. So most of the investments are being made in those technologies in the short and mid-term. We can see that only in 2032, the last phase of the energy efficient legislation, we will have some penetration of hybrids and EVs, reaching around 20% of the market. Just remembering that this is reflecting the vehicle sales, so we also have the imported vehicles in those numbers. And as I mentioned, we can see in green that 1.0 liters engines are gaining market share. Most of them are already 3 cylinders. OEMs are also replacing 1.4 and 1.6 liters engines by 1.2 and 1.5 liters. We can see in the blue line the average displacement dropping from 1.5 to 1.2 in the Brazilian market. This is reflecting the downsizing that I just spoke about it. And talking about transmissions, 2020 was the first year that automated transmissions surpassed 50% of the market. And here we can highlight some interesting points. The consumer was already demanding this technology in the past few years. It also has the high penetration of SUVs in the market. The SUV has been growing, and almost 100% of the SUVs are automated. And on top of that, we can add the OEM's strategy to comply with the energy efficiency legislation, increasing the automation of their vehicles portfolio. It is expected that 70% of the vehicles sold in Brazil by 2032 will have some technology of automated transmission. And when I say automated transmission, I mean any technology that is not manual. And in the chart, we can note that the most adopted tech in our market are automatic, followed by CVT, very used by Asian brands. But the most interesting fact here is that even with over 50% of the market having some automation, we only produce manual transmissions in Brazil, being imported all automated ones. As I mentioned before, the hybrid and electric vehicles won't be demanded to comply with 2020-22 targets. So the penetration of this technology in Brazil will face some growth starting only in 2025 to comply with the second phase of the legislation in 2027. We are forecasting a gradual growth, reaching 22% in 2032. Most of those volumes will be hybrid vehicles. Currently, we have only two hybrid vehicles being produced in Brazil, the Toyota Corolla and the Mercedes C-Class. And comparing Brazil with the main markets as China, US, Europe, and India, we will face a stop-start adoption in the next years, while this technology is already being replaced by electrification in other countries. And while the battery electric vehicles will reach over 20% in 2032 in those markets, in Brazil it will represent only 5%. So, in summary, I can say that Brazil is still fighting COVID-19 cases and deaths, and along with this, the political environment is impacting the economy. Unemployment is still growing, and the inflation that is on the government range target is already showing an increasing trend. The devaluation of the real is good for our exports, but at the same time, it's supporting the increasing trend of the inflation, what is not good for our economy. Our macroeconomic model is pointing to 1.91 million units in 2020. And besides the economic indicators pushing the numbers down, the financial environment is supporting this output. And we expect the 2019 output to return back only in 2023. It will take 3 years to recover the light vehicle market. And as I mentioned, the COVID accelerated some trends, and the market is changing. OEM needs to follow close those changes and take fast and wise decisions. The lean inventory level should continue next year, since it will continue to be a year with many uncertainties. The government didn't announce any delay on the Rota 2030 targets, but it won't be a surprise if they do in the next few months, due to OEM's pressure. Electrification will be demanded, but only in the long term, with the second and third phase of energy efficiency legislation. It is a little bit late compared with other regions, but it's going to the same direction. Thank you very much.